Ladies and gentlemen, welcome back to the channel. As you know, the markets are kind of in a precarious situation. Well, I have compiled a list of my top 3 stocks, AI stocks, to buy if this market does continue to fall. These are stocks that I have recently bought and or hold a lot of money in, a lot of shares in these companies personally. And these are companies that I bought on Friday that I plan to buy more of. I'm going to give you a bit of a rundown on each of them, why I like them and why I am buying them. Now, if you make it to the end of this video, I also have one stock that could be a good hedge trade in case tensions get worse. And I like this stock because it could be a hedge trade against tensions with China ratcheting up, trade war, all of that. But this is a very in-demand field, regardless if tensions with China die down or not. This stock was doing well, or, doing pretty well, before the whole China thing happened to begin with. So, really, we're going to be looking at 4 different stocks today. I'm excited to bring you this episode. Let me know your top 3 buys down below in the comment section as this market comes down. If you guys want to come join the trading community, come get access to all of the stocks that we are buying. This is only a small list of many others that we have been buying recently as well. Check it out, link down below. But let's get into your first stock on this list. So, top 3 stocks to buy if the stock market crashes. Number 1, this one is gonna be an obvious one. Rezolve AI. Now, if this is your first time hearing about the company, if this is your first time to the channel, welcome. Rezolve AI does agentic AI, commerce, and crypto. Okay? Basically, they're trying to make the online shopping experience as good as in person. Now, it's never going to be as good as going in person, okay? But they're trying to make it as comparable, meaning that if you have questions, you need answered by somebody in person, right? You walk into, a Nike store or a cologne store, whatever, you can ask the right questions, and their large language model, which beat ChatGPT 4, okay, and Claude in retail commerce metrics, okay, this happened like a week or 2 ago in their white paper report. Their model beat those multi-$100 billion models. Basically to get answers to questions, okay, create a better online shopping experience, okay. They also have the back end side of things. So when a company partners with Rezolve, like, if you type into Google, for an example, they use the example, the CEO did, Barbie Pink. If Burlington is partnered with Rezolve, Rezolve has partnerships with Google, Microsoft, and Tether, by the way. Well, your Barbie Pink coat is going to pop up as one of the first results if you're partnered with Rezolve. Okay, so there's other benefits to this. They're driving traffic to their customers' pages, okay? Once from that point, you can talk to the model, get answers to questions, and then they have the checkout experience, which is kind of like the TikTok shop. If you've ever bought anything on like TikTok, it's very easy, like one tab confirmation type deal, okay? Very easy and simplistic to cash out. So that's the AI commerce side. They also have crypto, which I don't value this at all in my modeling, okay? In my expectations for the company, this is a bit of a, I don't want to say a Hail Mary because that sounds like it's very improbable to work out, but it's not something that I think needs to work out. If it does, great. The company's far more valuable than I think it is, today, or where it is today, okay, or where Wall Street thinks it's going to be today. But basically, they have a partnership with Tether. They are developing their wallet for crypto. So their vision is that you can take your credit card or your crypto card or whatever that's tied to your wallet. If you own Bitcoin, you go to Starbucks, tap your card on the reader, pay in Bitcoin, and that is settled for you. That is settled for Starbucks in real time. There's no delay. It's instant settling, and Rezolve would obviously take a fee, and I'm sure there's other ways that they would make money on that. But that does seem like it would be very popular in America, but also outside of America in emerging markets where other currencies are not stable at all, right? The dollar, the pound, some of your major currencies are pretty stable overall, but a lot of the rest of the world likes crypto because you can buy crypto and the value shouldn't dramatically move day by day, right? It's not like Zimbabwe, you're seeing 1,000% inflation a year, okay? Something like that. So that's kind of the core pillars of the business. It is a $1.65 billion market cap. The company announced on their earnings just October 1st, 150 million in ARR is their target by year end 2025. They said they set these targets to achieve them and to excel past them. So the number's likely going to be a lot higher than that. And guidance they set at 500 million in ARR for 2026. Okay. This stock is trading at about 3 times price to sales in a hyper growth / low competition market that is $500 billion or more in size for the total addressable market with very little competition at all. The stock is dirt cheap. Now, I'll give you why that is. The stock went public via SPAC. A lot of Wall Street stays away from SPACs. So the company's just now starting to be discovered, if you will. There's not a ton of analyst coverage on the company, and the founder and CEO, Dan Wagner, he had a failed business in 2016. There's almost no comparables to Rezolve. It was a private company. They ran out of cash. They were unable to, get financing. Those kind of things don't happen with public companies the same way. Okay? It's a lot easier to get your hands on money if you're a public company. I'm not concerned with that at all, but those are all reasons why it's trading at such a steep discount to where other AI stocks are trading at. And I just look at that as an opportunity. Now, one thing about this company that is a little unique, they said on their last earnings that contracts typically take 3 to 6 months to finalize. So the company has a lot of visibility into their guidance. When the company sets guidance for 150 million in ARR this year, they already know they're going to beat that, right? When they set guidance for 500 million next year, they already know they're going to beat that because they're working on contracts that are not going to finalize for 3 or 6 months, okay? So they know even if a percentage of them fail or somebody backs out, they're still going to do well, okay? They're still going to meet guidance or exceed it, okay? Now, insiders own 38% of shares, which means stock goes up, you make money, they make money. Stock goes down, you lose money, they lose money. You always want insiders that have skin in the game alongside you, okay? So that is a big green flag. Citadel bought $100 million worth of the stock at $6.67 per share, which the stock is currently trading at $5.04 per share, following, again, some of the, crap that has taken place recently with trade and Trump and China. I look at this as value confirmation. Citadel has more information than we do. If they were willing to take a $100 million stake in the company, about 5% stake in the company at $6.67 per share, while Citadel can afford to lose some money, I don't think they would throw around $100 million for no reason. Okay, and if they were willing to spend that much money on the stock at $6.67 per share, the stock's at $5.04 per share today. If it falls into the fours, I'm a heavy buyer on that weakness, okay? Now it says Rezolve, again, strives to offer seamless checkout with crypto being settled instantly and used online and brick and mortar locations. They're projecting profitability, or analysts are. The company hasn't exactly said this, but by late 2026 or early 2027. Again, as I mentioned before, this is a founder-led company, which tends to be good. Normally, founder-led companies do better than non-founder-led companies. The founder and CEO today is Dan Wagner. My position size, 30,800 shares with a net value of $155,000. This is a heavy position for me, okay? I'm going to be right on this big or I'm going to be wrong on this big. But at this point, I think the risk reward is heavily skewed to the upside. And if the stock sells off even more and it just gets cheaper and cheaper, we're golden. In fact, the stock again is trading at 3 times price to sales. When I bought the company first, before the last guidance, it was at about 10 times price to sales. So it's about 3 times cheaper today than it was when I bought the company for the first time, when I bought the stock. So yeah, like, it's a steal of a deal if you believe in AI. Next stock on the list here is CCCX. It is roughly a $5.2 billion market cap. This is a SPAC that is merging with a company called Inflection within the next 3 to 5 months. This is a quantum company, okay? This company makes sensors, clocks, okay, different products within quantum, and what they also do is work on a quantum computer, okay, much like Rigetti and some of the other ones. Just this company is actually bringing in revenue. They're actually selling products in the quantum field, okay. This trades at a fraction of other quantum stock valuations with projected 50 million in revenue this year versus like Rigetti that doesn't bring in any revenue from products, okay. Why is this company trading at a fraction of Rigetti and IONQ, D-Wave, all the other ones? Because it's a SPAC at this point, okay? That's the risk. If, you know, the deal were to fall through, the stock's going to $10. Now, is the deal going to fall through? Highly unlikely, but nonetheless, still a possibility. And that's why, you know, I'm expecting significant upside right before the merger actually takes place, like the last month or so before. So like really at the end of this year, early 2026, you should start to see this stock really be reflective of, you know, the valuation gap here versus, again, other quantum companies. The biggest risk with this company is actually not the merger not happening and the stock falling 50%. That's not the biggest risk in my view. The biggest risk at this point is that all of quantum is just overvalued, right? All of quantum is in a bubble, and Inflection, maybe not as bubbly, could still be in a bubble. They're doing 50 million in revenue this year. Okay, it's a $5.2 billion market cap roughly. If quantum is overvalued, then, you know, there's just not much you can do about that. But if you believe in quantum, as a lot of people do, CCCX is a screaming buy. Now, Citron says that CCCX is a screaming buy. They also, again, agree that they're not trying to value quantum here. They're just saying if you look at other quantum stocks versus Inflection, CCCX, it's a screaming buy. Again, at a $5 billion market cap, Inflection is about $19.61. The stock today is $22.41. So it's a little bit over, again, $5 billion market cap. But Rigetti is in the 40s, okay? Rigetti is around a $15 billion market cap, far less, you know, quality company. That would mean Inflection's stock price, or CCCX, just to compare with Rigetti, if the market caps were exactly the same, would be a $58, almost $59 stock. The stock's $22. And Citron says Inflection should trade at a premium to Rigetti. So, again, you're looking at substantial, you know, undervaluation, assuming quantum is valued correctly. If quantum is just in a bubble and overvalued to begin with, Inflection's just a little bit less valued, right? Or a little bit less overvalued. That's the biggest risk. It's not the merger falls apart. It is that quantum is just in a bubble. And honestly, I don't know enough about the long-term quantum use cases to know if it's in a bubble or not. I have a pretty good idea that it's not in a bubble, but, you know, you never really know if it's in a bubble until it pops. Now, also here, again, Citron backing the company. Extremely skilled management. This is one of the things I really love about this company. They have only raised $270 million since 2007. This shows exceptional leadership and capital allocation. Okay, I'm assuming they're not profitable at this stage, and they've only raised 270 million since 2007. That was a really long time ago. The fact that the company is able to do 50 million in revenue this year and only raised 270 million since 2007 shows exceptional leadership and capital allocation. I don't think it gets better than that. Some companies out here that are poorly run are spending, 100 million a quarter and don't have much to show for it, right? This company, completely opposite. Management is extremely exceptional at how they run the company. Now, the company is also getting 580 million in net proceeds. There's also over $100 million worth of essentially like private holders that wanted to invest in the company in SPAC form, like privately, not actually buy the SPAC, but invest in the company before they go public via the SPAC. So there's some big heavy hitters backing this one. Now my position is 1,000 shares exactly, with a current net value of $21,770. The stock's at $22.41 per share. My average is around $16. If the stock starts to come down to those kind of levels, I'm a heavy buyer of the stock at those prices. Now, another stock that I am actually very, very excited about recently is UiPath. Now, this company has been around for a while, okay? This company went public in 2021. It's been around the block for a while. It's not a brand new company. Like, it's been around a while, okay? Now, the stock has actually seen record volumes recently. The stock has went up quite a bit. 2 weeks ago, the stock went up 5.65% in a week. Last week, it went up 32%. Why? Well, they're partnerships. UiPath is a turnaround story. UiPath provides an automation platform that uses AI and RPA, robotic process automation, to help businesses automate tasks, streamline workflows, and improve productivity. What caused them to go up 32% was their partnerships that were announced with OpenAI, NVIDIA, and Snowflake to broaden use cases and attract customers. This gives them big time exposure. What I mean by this is you get partnerships with NVIDIA, OpenAI, Snowflake. That alone is powerful from a marketing perspective. Like, would you rather go with an automation company that is not partnered with these companies or that is partnered with these companies? Even if you pay a little bit more and you get the benefits of this, that is big time clout, if you will. Okay. I say here, well-established company, currently profitable, which this is the only company out of this list so far that is currently profitable. And it's really, again, a turnaround story, right? Growth kind of stalled for a while, and it's starting to reaccelerate again. Their last earnings growth was up like 17%, something like that. But with these partnerships, it's probably going to get even more extreme. Now, the founder is Dana Anderson. That's the founder, and serves as the chief science officer. So he's still with the company. Okay. Not necessarily founder led. He's not the CEO role, but he is still with the company, which is good to see. Now, the stock currently has a $9 billion market cap and is currently doing $1.7 billion in ARR. It trades at about 5.3 times sales, so it's not expensive yet, just like Rezolve. I mean, UiPath and Rezolve are both very inexpensive companies for AI stocks. Like Anthropic is trading at almost 40 times sales, right? Other AI companies are trading far higher than that. So this company could go up dramatically before you'd look at it and say, oh yeah, that's like overvalued. The stock IPO'd at like $65 a share, roughly, right? Opened at $65.50, hit a high of $80 that day, hit an all-time high of $90 a share. The stock is currently $16.54. For a well-established company at this point that's profitable, just announced partnerships with OpenAI, NVIDIA, and Snowflake, yeah, I think it's a very compelling buy here. Their all-time low was back April of 2025. The stock hit $9.38. It's almost doubled from there. At one point, it was up 100% from the lows. So yeah, I'm not expecting this one is going to be at these levels for long. You could see a pretty easy path to like $60 a share if the company says some good things on their earnings and the trade tensions die down with China. So this one is definitely a screaming buy. Now, my position is currently 1,100 shares with a net value of $18,194. So this and Rezolve are going to be ones that I'm really adding to. CCCX, if it again comes down to like $16 a share, I'll be adding to that a lot. But these two are really compelling. CCCX is super compelling if you believe highly in quantum. I didn't have any quantum exposure. I sold IONQ at like $11. I bought it at like $7. Like totally missed the boat on that one. But I do have enough of a position in the one quantum stock that is trading at a severe discount to the others in case, quantum is something you should be invested in. Okay. And I'm still trying to learn all this qubits and all this crazy terminology and what it all means. And as I learn more, I'll probably be investing more in that one. But all three of these look like screaming buys if the stock market does come down in any kind of material way. And last but not least, okay, the stock here that is pretty much a hedge if tensions continue to ratchet up with China. It's USAR, ticker symbol USAR. It's USA Rare Earths, okay? This company is actually in talks or has been in talks with the US government to have a stake taken by the US government, okay? So that's what kind of got the stock moving from the 20s into the 30s. But the trend and onshoring of rare earths is not going away anytime soon. Now, if there is, again, export controls from China, if there's, tensions that continue to ratchet up, yeah, this could see some heavy buying pressure, okay? As one of the only companies in America that is actually mining these rare earth metals like magnets, okay? Hopefully that makes it clear. Now, the company is not currently doing any revenue this year, but is projected to do about $60 million in revenue for next year. The company's about a $3.18 billion market cap. So part of this trade is if tensions get worse, people are going to buy the stock, right? The stock was up 9.5% in after hours and up 5% in regular trading on Friday because of what was going on. It was up 20.5% at one point, so it did fade from that, but got a lot of that back in after hours today, or Friday. Okay, so yeah, this is a hedge in case things get worse with China, or if they get better, I still think this can do well. But is it overvalued? Is it undervalued? I mean, it's hard to say. I think the general trend is people want to invest in rare earths that are, being brought to market in the U.S. Now, in this company, I have 200 shares in this portfolio. Average cost $34.39. So I'm really not up much, only up about 4%. Current market value $7,140. Also have 200 shares in this portfolio. Average cost $32.90 per share, up 8.5%. Current market value $7,140. So, 400 shares total, about $14,000 give or take in the stock. And yeah, again, to where the stock could go, it could go over 100 if tensions get worse with China and the government takes a stake in the company. And again, it's there's only a select number of companies that produce magnets in the U.S. at all, right? That alone gives it some scarcity, which scarcity brings value. So yeah, I do like this as a hedge trade or just the general direction, things are going in. Domestic rare earth manufacturing. So yeah, these are the stocks that I will be buying heavily as the market comes down. Among many others, this list was really hard to narrow down, because there's so many stocks that I like equally. You know, I it was a tough list to bring about. Wanted a little bit of diversification with the quantum. You get some of the rare earths, you get the AI, but there's a lot of stocks out there that would be screaming buys if the markets continue to fall, that I will be buying as well, that are just not on the list. If you guys want to see all of those stocks anytime I buy, sell, trade, hedge, do anything, check that link out down below in the description of today's episode. But that is it. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.